Cannabis Growth Opportunity Corporation is a cannabis-focused investment corporation with both public and private cannabis holdings. The company's main objective is to provide shareholders long-term total return through its managed portfolio of securities related to products or services in the cannabis industry. Cannabis Growth Opportunity Corporation is listed on the CSE and trades under the ticker symbol CGOC.
All right, as we've been sort of leading to our guest today, Jamie Blundell is the COO of Cannabis Growth Opportunity Corporation. Jamie, welcome to the show.
Great, thank you very much. Happy to be here.
So you've got an expert here with Ed,
yep,
and you've got an interested potential investor. But first, as we were sort of having this discussion, you and I, just before the show, and I was trying to get a sense of what you guys are actually doing at Cannabis Growth Opportunity Corporation. Who are you guys? How did you get involved? And how are you another opportunity for people to invest in this space?
Yeah, no, that's a great question. I think we're a great opportunity to invest in the space because what we represent is an actively managed, diversified portfolio of both public and private investments. Mm-hmm. And so you have to think of us as a fund. We're an investment corporation, but, which gives us a little more flexibility in how we operate. But essentially, we're a basket of both public and private companies. And what's unique to us is that we've got the ability to invest in private companies, which typically retail shareholders don't get access to. Mm-hmm. And we can make investments anywhere in the world, including the U.S.
One of the things, Ed, that I found fascinating talking to Jamie before the show is the idea that obviously, publicly traded companies, their value fluctuates as the market does. Privately traded companies, as you say, are valued, or the evaluation is on the day you buy them, and yet as their value increases, their costs on your books stay the same. Explain that to me, because I found that interesting.
Yeah, no, it's a good question. It's probably one of the reasons why we're trading at a discount right now is because the retail shareholders are having a tough time putting a value on our private companies.
You're trading at a value less than you say that, like, obviously the fund is worth.
So our net asset value is north of $45 million, and we're trading at a market cap of $34 million. So
around 30%, 35%.
Yeah,
undervalued.
Last time we publicly announced this, it was 38%. So we're working obviously on closing that gap. But I think, you know, to address your question, the challenge is we make these private investments, we leave them on our books at cost. And unless they've had a subsequent financing, we will keep those investments at cost. And so over time, if they haven't done anything other than just grow their business and hit the milestones that they say they're going to hit, then we know the value of that investment is growing. But we don't mark it. We leave it on the books at cost.
Now, if they do have another financing, if one of your private companies does another financing at a higher price, do you change the price?
Well, what we do is we take that as an opportunity to do a review. I'm very close with our private investee companies, and so I call them up. I walk through the new valuation model, and we've got examples in our portfolio of both. So we're being very conservative in how we mark the private portfolio.
This is going to be a stupid question. I know you said there was no stupid questions.
There's no stupid questions.
This could border on the stupid, or at least certainly uninformed and ignorant. I apologize in advance. In fact, I was thinking of getting a T-shirt that says, "I apologize in advance for some of the things I might ask." When you have these private companies within your fund, are they waiting to go public? And if they are, when they go public, does that affect the value of your fund?
Oh, absolutely.
That's exactly.
That's where we're going to see.
That's where you're going to see, in my estimation, a real appreciation in the value of the fund, because private companies are always valued a lot lower.
Well, that's what you were saying, because they don't have to disclose their financials. So really, for people that are interested in the Cannabis Growth Opportunity Corporation, should they look at some of those private companies and see which ones are about to bubble under and go public, or possibly go public?
Absolutely. So we've got now, like, the premise is, when we were investing in the privates, is we want to invest in companies that are mid to late stage, pre-IPO. Okay. So we want them to be, we want to have a liquidity event within 12 to 24 months. If you look at the 15 investments we've made so far, one of them had a liquidity event in 3 months. So that was a nice win.
I'm only smiling because it's so great when you get to know the lexicon of another industry. When you call it what did you call it? A liquidity
event. A liquidity event.
Liquidity event.
We're not drinking anything.
That is. Honestly, I'm going to take some buzzwords away from this week, and I'm starting with liquidity event.
Okay.
So when you guys think about a company going public, back to what you taught me in the first segment, Ed. Ed's talking about get there close to zero. So when you have a company that's about to go public or a liquidity event within 15 or 20 months or so, you're getting closer to zero.
Well, you're already getting close to zero because you went in privately. The private rounds. And then the public rounds are usually higher.
Well, that's what I'm saying. But if you're an investor in Canopy Growth Opportunity, then you're looking to see, you want to get, that's a chance for you to get close to zero.
Can I give you a great example?
Yeah, please do.
So in the portfolio, we invested last summer in a company called Vireo Health. A great company. This was started by an emergency room doctor who 6 years ago in Minnesota saw the opioid crisis firsthand, and did the research and realized that cannabis was an alternative to opioids. Started a cannabis company, grew it to operating in 4 states. By the time we invested in it last year, they did 18 million in revenue. So we invested in that company 1.5 million US at $100 million valuation US of that company.
Wow.
So over the course of the year, they hit every single milestone. So they've now grown to, they're operating in 6 states with definitive agreements to eventually operate in 11 states. So definitive agreement means they've got, they're going to buy a company and it's already a done deal. That it just hasn't closed. And then they've got an LOI for California. So they're going to be in 12 states very soon. So they'll be a very large multi-state operator. So that's another buzzword for you, MSO.
And when is their liquidity
They're doing a $50 million raise right now. The books are just closing, so if you're interested, you know, it's a great opportunity.
What percentage of the company are they giving up for $50 million?
So they are doing this raise at a 400 to 500 million valuation.
Wow.
So there's an example.
They went in at 100 million, right?
Yep.
Right.
And now it's valued at 400 to 500 million.
Are we talking about a 5-banger? Are we doing a 4-banger?
You know,
4 to 5 bang, like certainly a home run. Certainly a home run.
I'm just trying to throw in
maybe not a grand slam, but a home run.
But what's the name of this company?
Exactly. Vireo.
Vireo. And is Vireo on this list?
Yeah, it's right. It's the.
Oh, here it is. Vireo. Okay. VIR.
But you know, to give you an idea, that we made that investment last summer, so it's less than 12 months.
Right.
For 4 times your money.
You know, one that's going public tomorrow is CB2 Insights. Formerly MVC Technologies and Sale. They're right down there.
CB2, where are they? Which one?
They're this one right here. They used to be called Sale Cannabis. And,
okay.
You know, very interesting company. They're really looking more on the data side of things and decision clinical support tool for doctors. And they have clinics in 12 states right now, 28 clinics in 12 states, I believe. They're doing 10 million in revenue. They'll do much more next year. They were an investment we made last year. They're going public tomorrow.
Back to what you were saying, Ed, about, you know, the nice thing about your company, Jamie, is that if I don't know the minutia or the fine print of Vireo or this other company, what I get to do with Canopy Growth Opportunity is feel like I'm part of it without having to, you know, get into when something is going to go public or it's not. Because your company, if I may just say, I
got the chart up here, so we could put the chart up on the screen right now. Actually, I want to make a couple comments.
Well, I was going to say, it says here your company's updated net asset value per common share as of a couple weeks ago is represents a growth of 29% since your IPO? Since our IPO, yeah. So even if I'm just, rather than Vireo specifically, I can invest in your company and ride the growth as the companies that you hold grow. Yeah, now the challenge is our share price is not $2.99. Our share price is, you know, $2.20. $2.20, exactly. But I think, can we get the chart up here, Control Tower? We need the chart. Anybody in the Control Tower? Someone get Ed a chart, because I feel like the chart is like Ed's blanket. It's the security. I need that chart. I need it now. We need a chart, people. You guys, there we go. Okay, so look, they went public here, it looks like, beginning of 2018. Yeah. Okay? And quite often with these things, they sell off for whatever. Okay, I made a mistake here. I'll get that back. So sold off, and then we had a period of consolidation. And again, this really has nothing to do with the value that's inside the company. I mean, it should correlate, but sometimes it doesn't. So look, we had this period here of consolidation where it's up and down, and then we went into the end of last year, which was horrendous for tax loss selling,
and we had this just precipitous drop, followed by a very similar rise. Look at this, almost a perfect V. Yeah. Okay, and now, you know, if you can get through here, you're off to the races.
Can I just see that for a second? This is just so cool that Ed can just do this stuff. Like that's pretty cool shit.
Anyway,
okay,
it looks good. It looks
does,
good, and
yeah.
it's a way of getting into the marijuana space.
Well, yeah, because you're getting access to a diversified portfolio.
And so Jim said you were a good stock picker.
Well, we're getting there, and we've got a great portfolio manager, and at any given time, we've got 18 to 22 public holdings, and between 10 and 15 private holdings.
And will you keep it around that ratio? Like
we will, absolutely.
10 to 15, if you get, and some of them go public, will you add? And are you looking, so wait a minute, let me ask you this. Are you raising money on a regular basis to?
No, we aren't raising money at all.
So you want to grow your value?
Absolutely. Okay. So we're going to do that two ways. One is through the appreciation of our investments.
Yes.
And then we do have a full warrant at 250 with an accelerator at 350. And so,
okay, so the
instead of us, instead of us going to raise money, what we'd love to do is access that warrant and then use that capital to then reinvest and grow the business.
I understand you made an investment in C21?
Yeah, C21.
C21. Yeah. What was the reason behind the investment, C21's investment into CXXI?
Yeah, so
I wrote that down, but it was a couple hours ago, and now I can't remember what that was about.
Yeah, so CXXI is C21.
C21, thank you.
So that's XX1 is...
Yes, I get that now, Ed. I'm sorry. I told you.
I figured it out yesterday.
I looked at it.
I figured it out yesterday, okay?
No,
it only took me...
I'm laughing because I did the same thing when the iPhone
three years.
Something came out. I called it XI.
Yeah.
Anyway, so what was the reason behind that investment?
Well, we like what they're doing. They're looking to consolidate a number of operators.
Are they private or public?
In the US. They're public.
They're public.
They're public, and they've just recently acquired a Nevada operation, which will add a tremendous amount of revenue and eventually EBITDA to that business. And so we like the trajectory, we like the business model, we like investments in the U.S. There's still a big valuation gap between U.S. companies and their Canadian counterparts.
Okay.
And so as you look at our portfolio, both public and private, is close to 50% U.S. based.
Jamie, before we let you go, someone has a question here. It says the CGOC is still an absolute steal here. 6% of the private book in Jushi. I don't know what that is. That's going to double or triple. Jushi?
Yes, Jushi.
That's going to double or triple by the next markup. IPO, I think, says Dylon.
Yeah, you know, Jushi is another great example of a U.S. private company. We were in at the early round. We invested at $1, and they're just currently raising money now at a $2 valuation. Wow. And so we're quite excited about that. They've got quite a bit of work to do on getting a number of their businesses from LOI stage to definitive agreement, and then after that, we're quite excited about where they're going.
All right. But listen, I really enjoyed this. I learned a lot.
We're learning.
Thank you very much.
We're learning. Yeah.
We're learning and growing.
I'm happy to come back anytime. Thank you very much.
I think one other thing I wanted to point out, when we were interviewing the gentleman from CXXI, one of your holdings, it was $1.05, and a month later it's $2. Like, because we were drawing attention to the fact, because this guy's a very judicious stock picker, trying to find value. If you find value in this space early enough, it can double very quickly.
You should have seen how excited Ed got in the pre-show meeting. All of a sudden he got a message. Jim wants to talk about Jamie, and then he had to leave the meeting, and then it was like some dark intel on you.
I had to have a shot.
The bottom line was, you're blue chipped. Great meeting you. Jamie Blundell, Cannabis Growth Opportunity Corporation, which is what it says. It's an opportunity to grow within the cannabis space without having to worry about individual companies. Ed gives it a big thumbs up. I don't even know where to go with it, but I'm going to throw some money at you. I don't even know. You know, are people constantly hitting you up for like, hey, Jamie, what's going on with the...
Absolutely, all the time, and that's part of the best part of the job is meeting with the companies on a regular basis and listening to their stories.
Could you just put your number in this for me? Thank you. No, don't worry about it, Ed. I'm working my own side hustle. Well, thank you very much.
Thanks.